Have you ever paused to think that every successful company you interact with, from the huge car makers to the smallest software startup, is actually running on two separate, and I mean fundamentally different information systems?
It's so true. And most people never see that second system.
Exactly. It's this brilliant duality, and that's really what this deep dive is all about. We're going to separate those two systems:
Mm.
management accounting, which let's call it the internal playbook.
In financial accounting, which is the external scorecard for everyone else to see.
That's a perfect way to frame it. Our mission today is to give you a real shortcut to understanding this. We're going to pull out the key sort of competitive nuggets from the source material.
Right. We want to explain why these two systems even exist, who they're for, and I think most importantly, why confusing them. Well, it leads to really, really bad business decisions.
At its heart, the philosophy seems simple enough. An organization needs a proprietary competitive intelligence system. That's the management accounting.
And alongside that, it needs a standardized public reporting system. That's your financial accounting.
So let's stick with that analogy you brought up. Management accounting is the internal engine, right? Or maybe the coach's secret playbook.
Yes, exactly. It's all about driving the business to be faster, better, more efficient, while financial accounting is just, well, it's the official scoreboard for the public. It just reports the final verifiable results.
Okay, so let's dig into their ultimate purpose, because that feels like where the split really begins. It's this fundamental divide between a competitive need and a compliance need.
Precisely. Management accounting, or MA, exists for one reason: to satisfy a competitive need. Its goal is completely internal. It's about understanding the economics of your own business so deeply, so intimately, that you can frankly crush the competition.
So it's the driver of performance. It's looking inward for any tiny edge it can find.
Relentlessly. And if MA is trying to, win the game.
Then FA is just recording the final score.
Right.
It's not built to find efficiencies or win anything. Its whole purpose is to give outsiders, investors, banks, regulators, a fair and comparable report.
So they can make their own decisions. The ultimate goal of FA is standardization. It has to create a common reporting platform so an investor in, say, New York can compare company A with company B.
Even if they're in totally different industries.
Right. It lets them decide where to put their capital. It's simply the mandated reporter of past performance.
So we can say financial accounting is focused on what? Stewardship, compliance, and capital allocation.
Yes. While MA is all about the operational guts of the company, planning, controlling, and evaluating. It's that continuous feedback loop that actually makes the engine run. It's always looking forward.
Okay, let's peel back the layers on that internal playbook then on management accounting. But the first thing that really jumps out is who uses it and just how secret it all is.
The users are strictly insiders. We're talking managers. From the CEO all the way down to the shift supervisor on the factory floor, they're making detailed, daily operational calls.
And that data, the cost structures, the efficiency metrics, it has to be kept proprietary, totally secret.
It has to be. I mean, think about it. If your biggest competitor knew the exact cost of every single component you buy,
Your advantage is gone, just like that, overnight.
it's a massive strategic weapon. And the data itself is so much richer than what you see on a public financial statement. MA uses both financial and non-financial data.
What do you mean by non-financial?
Well, you're tracking dollars and cents, of course, cost per unit and all that. But you're also tracking things like employee turnover or customer satisfaction scores or scrap rates, anything that drives performance.
I see. So it's detailed and it's always looking forward, trying to influence future actions.
Exactly. And that leads to maybe the most powerful difference of all: the governance. Or really, the lack of it.
Right, because financial accounting is famously rigid. It's all about the rules, like GAAP or IFRS.
But management accounting principles are, and this is key, the least uniform, and they are not mandatory.
That flexibility is the whole point, isn't it?
It's the whole competitive edge. It's not a legal system. It's an organic one that grows from best practices. If your company's strategy is all about, say, speed to market, your MA system will be custom built to track and optimize exactly that.
You could never do that with GAAP. GAAP is a one-size-fits-all template.
And if you had to use those public rules internally, it would just kill innovation and your ability to adapt. That custom design is what makes MA so nimble. It lets management pivot, immediately based on new data.
And that whole adaptation process is kind of formalized in that cycle you mentioned. Plan, control, and evaluate.
That's the engine running right there, that continuous cycle.
Okay, let's start with planning. The source material breaks this down into two time horizons. You've got the long run, the strategic stuff, which is called capital budgeting.
Capital budgeting is where you make the big bets. You're planning for a new factory, a massive software overhaul, a new product line, things that support the long-term 3 to 5 year plus strategy.
It's the high-stakes blueprint.
It is. And then you have the short run, the tactical side.
Yeah.
That's about preparing operational budgets. This is the really granular plan for the immediate future.
The next week, the next month, the next quarter.
Exactly. How much inventory do we need? How many shifts are we running? What's our expected cash flow next Tuesday? It's that detailed.
So once you have that plan, the engine moves into the controlling phase, and this is where MA becomes a real-time system.
This is where it really shines, I think. Controlling is the function that makes sure you actually stay on track with that detailed plan.
So it's not passive. It actively implements the plan, and it's constantly checking how actual performance compares to what was budgeted. This is where you see tools like variance analysis.
Variance analysis is absolutely essential. Think of it like a radar gun correcting you as you go. So let's make it concrete. Let's say your budget for raw materials this week was $1,000,
Okay.
but the actual costs came in at $1,500. That $500 variance is immediately flagged by the system
And why is that so critical?
because you don't wait 3 months for the quarterly financial statements to tell you that, oh, by the way, profits were down because costs were too high. By then, it's way too late.
The MA system flags it now, so you can investigate immediately. Was it a bad batch of materials? Did our supplier just hike the price?
Exactly. This is the heart of what's called management by exception. The system isn't designed to report on the 95% of things that are going right,
It's designed to scream about the 5% that's going wrong.
just so managers can focus their limited time where it's needed most.
And that closes the loop with the final step. Evaluate. You've planned, you've controlled, and now you assess the results.
You analyze the performance, you tie it to incentives, you reward the people who did well, and then, critically, you feed all those learnings right back into the next planning period. It creates this cycle of constant improvement.
Okay, now let's pivot and sharply contrast that whole dynamic secret engine with the external scorecard. Financial accounting. The user base here changes everything.
It dictates the entire system. The users are pure outsiders, investors, creditors, regulators.
And unlike the secrecy of MA, this data must be fully public. Transparency is everything.
Which is why the data is so restricted.
Right.
FA is strictly financial and monetary. It only deals with historical transactions that can be measured in, dollars or euros.
And it's backward looking. It's only about what's already happened, and it's highly summarized. You don't get the nitty-gritty, you just get the big number for cost of goods sold.
And if MA's governance is flexible, FA's is the polar opposite. It's highly uniform and it is mandatory. It's not optional.
It's basically a legal system.
It is. It's legislated by standard setters like the FASB in the US or the IASB internationally, and it's enforced by regulators like the SEC. They exist because, for the outside world, we all need to agree on what profit and assets actually mean.
For that fair comparison, so if MA is trying to shape the future,
FA is focused entirely on the past. It's just historical reporting. It tells you the score of the last game. It can't help you win the next one.
Okay, so let's pull all of this together. We've kind of covered the 5 major contrasts here.
Let's crystallize it.
First, the why. MA is for the competitive need. FA is for the reporting and compliance need.
Second, the data. MA uses detailed, secret financial and non-financial data. FA uses summary, public, and only financial data.
And third, the time focus. MA is all about the future and real time, that whole plan and control loop.
While FA is focused entirely on the past, the historical record.
Which brings us to the really critical question, why do you absolutely need both? You can't just pick one.
You need the engine and the scoreboard. The danger of having just one is, well, it's huge.
The analogies in the source material really hit this home. Let's take a company that only uses financial accounting. They know the final score. We lost $50 million this quarter, but they have.
They have no coherent system to improve it. The source material puts it so vividly. It says that company is driving with the windshield covered.
Wow, that's a powerful image.
It is. You know where you've been from the rearview mirror, but you have no idea where you're going or how to steer away from the next obstacle. You only find out you crashed long after it happens.
Which is terrifying for a business. Okay, so conversely, what about a company that only has a great MA system? They have an amazing playbook, super efficient operations, But what's the problem?
They cannot communicate their legitimacy or results to the outside world to secure the capital needed to grow. No bank is going to lend you millions based on your secret, custom-made internal reports.
They need that standardized, audited, public scorecard.
To prove they're a worthy investment, they can win the game on the field, but they can't get the funding to build a new stadium.
And this isn't just theory. This is the framework that let a company like DuPont manage its huge empire a century ago using MA metrics like ROI. And it's what drives hyper-efficient companies like Walmart today.
It determines success at every single scale. You use MA to win the game in the marketplace, and you use FA to report the official score to the league and to your fans.
So just to recap, MA is the internal engine. It's proprietary, custom designed, forward-looking, and it's constantly driving performance through that plan, control, and evaluate cycle.
And FA is the external scoreboard. It's standardized, it's rigid, it's historical, and it reports your auditable performance to the rest of the world.
Understanding that distinction really does feel like the first step to using accounting as a strategic tool, not just a chore you have to do for the government.
It's everything. And I think what stands out most is that realization that a company's true competitive edge is buried in that secret MA system. That's the engine the outside world never gets to see, only the results of it.
Exactly, and that's the provocative thought we want to leave you with.
Right. If the official public scoreboard, the FA, only tells you what happened, and the superior internal playbook, the MA, is totally secret.
How can you, as an outsider, as an investor, or just an observer, look for clues about a company's superior internal system?
You can't read their playbook, no. But you can start to decode the consistent, stellar outcomes it produces year after year. And recognizing that duality, that there is a secret playbook driving those results, well, that's where real strategic insight begins.